So I just learned a lot about business credit cards, a lot, and in not a lot of time. It's something that I've never really had to think that much about before, but now I have my own business, and I was wondering, well, what even are the benefits of having a business-specific credit card? What types of business cards are out there? And importantly, how do I get one? Hey there, I'm Market Ramp, and like a lot of people, I started these questions on Google and ChatGPT, but then I remembered that I work with the people at Ramp. They're real finance experts on the cutting edge of saving businesses time and money. So I called my new friend Ken Boyd to learn all about business credit cards directly from a former CPA and accounting professor.
I guess maybe just to catch me up, like what are like a handful of the top reasons that people would consider getting a business credit card over getting a normal regular credit card that I'm used to?
So I think it starts with the real critical need to separate your personal and business expenses at the very beginning when you create your entity. So one reason for a business card is to do that segregation. That's one reason. And the second is to build business credit, which at the beginning may not be important, but as you go on and you have bigger capital needs, credit becomes even more important. So you can build credit on your business account just like you can on your personal account. There are rewards and perks. What I like about Ramp is they do the simple cash back. There are lots of other credit cards that I've written about that have more complicated perks. So there's a variety of perks and rewards.
So what are like some examples of the other types of perks that you might get from a business credit card?
They can be very specific to the type of spending you're doing. So, for example, it could be discounts on Shopify or HubSpot or services that you use. A lot of subscription services you can earn discounts on. It's big on travel, particularly if you're working for a startup where you're traveling a lot, airlines, hotels, those kinds of things. So there are cards that are tailored to certain kinds of spending. If you're traveling a lot, that may be one card. If you're heavy on subscription spending, it may be a different card. So those are generally some of the perks. It improves cash flow because if you use your credit card, you may not have to immediately pay it cash. Since you may be paying at the end of the month, even if you're paying in full, you've got cash flow management improvement because you don't have to pay immediately. And the last and maybe the most important one is spending control, because if one thing I've seen over the last 20 years is as more things get automated, controlling spending becomes more effective. And it becomes more effective because you can do it immediately. By taking out manual processes, you can review spending, approve it, stop unnecessary spending almost in real time, which before automation was very hard. So those are the reasons to use a business credit card.
If you don't mind just kind of talking a little bit about yourself, your background, and why you're a lot more qualified to talk about this subject than I am.
I had a long career as a CPA and got into the content business in 2008. I started a YouTube channel that has about 670 videos on it. That led to a literary agent finding me online in 2012 to write the Dummies series of books for Wiley Publishing. So I wrote 4 of the Dummies series books on accounting between 2012 and 2016. Then I did video work for LinkedIn Learning and some other sites. So that's a long-winded way of saying I've been a full-time content person in accounting and finance since 2012. Wrote the books, and now most of my time is spent writing and doing video work for SaaS-related finance and accounting companies.
You have already kind of talked a little bit about different cards having maybe different benefits. Is there a rough categorization of different types of cards out there?
They're slightly different, and there's probably 2 or 3 different types. So there's the standard business credit card that is just like a credit card you'd use personally, that you're using the card, you're making payments. You may be able to carry over a balance to other months, you may not. There are charge cards where you have to pay the full balance monthly. And those charge cards aren't necessarily bad because even though you have to pay the balance monthly, it does give you, a 30-day window where you can use the card. You don't have to use cash, plan your cash flow, pay it at the end of the month. That is a business charge card. Then you have secured cards, just like we have a mortgage secured by a home. We have secured cards in our personal life, secured loans. You can have a secured card that's backed by some sort of asset. It could be a personal guarantee. It could be some other asset. So it could be secured. And then you have corporate cards, which are larger, more established companies that have more consistent revenue and profits. So there's really 4 different types. There's one version that's secured, the others are not secured, meaning that they're unsecured and they're just based on the borrower, the credit card user's ability to pay.
So yeah, it didn't take Ken long to give me a good lay of the land. We covered the reasons why it's worth having a business card and the different types of cards that are out there. But of course, my next question was, well, how do I get one for my business?
So there's these different types of credit cards. What are like the general prerequisites required to get one of these credit cards? And does it differ depending on the type of card that you're getting?
It does differ. Generally speaking, you probably need to have a personal credit score of 670 or higher because they're going to look at particularly if you're right at the beginning of a startup, they're going to look at your personal side, 670 or higher. And it's important to talk about we have the personal side, but then we have Dun and Bradstreet's that does the analysis on the business side. So there's personal and there's business. So you have FICO scores that you may be familiar with. People watching this because they know FICO scores for their personal credit, but then you have Dun and Bradstreet and other measurements for business credit. It's also important to have an EIN number, an employee identification number, which is a social security number for a business, again, so you can segregate business from personal. And common sense would state, particularly if the issuer is a large bank, a large money center bank like American Express, JP Morgan, Chase, those kinds of places, they're going to take a very close look at not only business revenue, but the consistency of your business revenue month to month. It will be harder to get a credit card from the large, what we call money center banks, Wells Fargo, JP Morgan Chase. They have higher standards and are not willing to take as much risk. And then lastly, it's important to set up a business entity that goes along with the EIN number, to set not only to set up credit separately, but also to separate the liability, personal liability from business liability.
Okay. And then what does the application process look like? Like how long does it usually take?
It is much faster than it used to be. In most cases, you provide your social security number from the founder, your EIN number, revenue, expenses, send financial statements. You can do a lot of this online and by phone now. And what they're going to do, and this is the part where the time difference can vary, they're going to do some sort of analysis on creditworthiness. Most of the companies now have an automated algorithm that reviews that creditworthiness. So it's actually pretty fast. It could take 7 to 10 business days to make a decision. Some online applications can be just a few minutes, but particularly for the bigger banks and bigger entities, it could be 7 to 10 business days. So you do it online, they run it through an algorithm, you get a decision within a week typically. Ramp is faster than most because for a couple reasons. They have a completely automated process and they have some what I would call non-traditional ways of assessing credit. They're going to take a holistic approach toward the business. So they're going to look at revenue, consistency of revenue, but they're also going to look at available cash balances and other factors to make a decision about credit. Based on my experience, they make faster decisions than most of the other competitors.
Okay, well, that sounds a lot simpler than I thought. But before I let Ken go, I wanted to ask if he had any other advice, anything that I should know about business cards that other sources might not tell me.
Is there anything else that I should know about it?
There are some trends that people need to know, and that is that business using technology and credit cards help vendor relationships because not only is it you using a business card, but you making it easier for vendors to pay you with their cards is really important. And there's automation that can help speed that up. You can process invoices faster, pay vendors faster, and get better vendor relationships. So it's not only outgoing money of you using a card, it's letting vendors, making it easy for them to use cards to pay you, I think is important. I also like to mention that the more you can automate, the harder it is for somebody to commit fraud, which is really important when you're out there spending money, because the faster somebody can review a transaction, get an alert if it's unusual spending, have somebody look at it, the faster that wheel turns, the harder it is for somebody to commit fraud, which is why I'm a huge fan of accounting departments being fully automated. And I think that's a factor that startups should consider, particularly before they scale up. And instead of doing 100 bank transactions a month, now they're doing 2,000. The only way you can keep up with that massive increase in transactions and prevent fraud is through automation.
And is like the primary risk of fraud, is it like your employees that are kind of, performing transactions on your behalf, or is it other things just that could be impacting your business? I guess maybe vendors.
So it could be an employee who's using a card for a transaction that isn't budgeted for or not allowed. The other thing is, and the reason that finance needs to be automated, is somebody running something through your bank account that's not approved. For example, a fictitious payee. Somebody creates a company name that's very close to the name of a company you do business with all the time. The name's slightly different, and they run transactions through them because there's a very big similarity between the legit company name and the fake company name. You end up approving and paying the invoice that happens to be fraudulent. With automation, that can get caught because automation can say, oh, wait a minute, the mailing address is different, or the dollar they normally order $5,000 and this is for $8,000. So automation and machine learning can catch those faster and possibly prevent those invoices from being paid. It's two things. It's company credit cards with employees, but then it's also the bigger issue of fictitious payees of somebody trying to run something through your bank account, because cash is always, for most businesses, cash is the account that has the most transactions of any account in your chart of accounts. So that's why that's so important.
Thanks again to Ken for that very dense download. He actually has his own YouTube channel all about finance, which I've got linked in the description below this video if you want to check it out. Now, if you found this conversation as helpful as I did, give the video a like and subscribe to Ramp for more expert tips on how your business can save time and save money. See you next time.